Good morning, I'm Donnie DeLange and I'm going to highlight some main points of the Woolworths interim results. Woolworths has a strong domestic brand and an attractive portfolio of operations with an impressive track record. The group's entry into Australia has however been less successful and remained the primary concern for investors. Trading at a forward PE of 16 times, the share is trading in line with its long-term average, but we feel the share offers value on a relative basis. In our view, the recent earnings disappointments and subdued trading conditions are adequately reflected in the group's valuation. We would recommend longer-term investors to buy the share. Our valuation remains dependent on margin recovery, as our valuation assumes a medium-term improvement in margins. Should this recovery continue to disappoint, it could place our valuation at risk. The group's Australian operations are exposed to a number of moving parts, which suggests high execution risks. The threat of Amazon's entry into Australia could further impact David Jones's earnings. The group has good operating margins, a high ROE, and its operations are highly cash generative. The retail industry is, however, expected to remain competitive. Looking at some financial highlights, sales was up by 2.5% to 38.8 billion rand. Gross profit was up by 3%, resulting in the gross margin improving by 10 basis points to 40.7%. The adjusted EBITDA declined by 7%, which combined with a 3% increase in depreciation expense resulted in a 10% decline in the adjusted operating margin to 3.4 billion rand. Ultimately, both adjusted headline earnings and adjusted headline earnings per share came in 9% lower at 2.2 billion rand and 224.7 cents respectively. A diluted loss per share of 503 cents per share was reported, and this was mainly due to the 6.9 billion rand impairment because of the reassessment of the David Jones assets, as well as a 1.4 billion profit on the sale of the Market Street in the previous period. An interim dividend of 108.5 cents per share was declared. This is 18% lower than in the previous period. Lastly, looking at the portfolio guidance, we maintain our overweight guidance. A structural economic recovery could be a tailwind and provide upside to our estimates. The group's balance sheet is highly geared, but finance costs should be manageable, informed by the cash generative operations. We do, however, expect a short-term weakness in the dividend. Woolworths has a capped Swiss weight of 1.17%, and we would recommend portfolio exposure of up to 5.26%. This is primarily informed by our valuations. Before I end off, if you wish to place a trade, please contact the trading desk. Investors are reminded that they can refer to the research tab on the PSG Wealth Trading platform to view the more in-depth company analysis. Please look out for our next trade idea on the group, which should follow the release of its year-end results towards the end of August. Investors can also refer to the filter tab under the research section of the PSG Wealth Trading platform for a live relative valuation on the group in the interim. And also please note the following disclaimer. Thank you very much and enjoy the rest of your day.